So I see up here we have another group, another large institution buying Bitcoin. This time it is a university. And I think this just goes to say there are so many different people and institutions and groups that can actually purchase Bitcoin, and there's only a finite amount of them. So really cool that Emory University decided to get into the Bitcoin ETF rush. 16 million, a small amount for a university pension fund, but that being said, it's exciting and a really good start.
Yeah, this is huge. I mean, these universities have billions of dollars in their endowment, and to them, this is a small drop in the pan, but I think it's a step in the right direction. And if universities just started putting even a small fraction of their endowments into Bitcoin, we would see a major rise in price just from that.
Ooh, it is a spooky Halloween edition of User Extractable Value, brought to you by the Advantage Blockchain team. Welcome, everyone.
Let's go. Bitcoin all-time highs.
Almost.
Not yet. Not yet. We got to pass, what, 73,400? We touched it. We can't blow our load yet.
I think it's, 73.8 is what we're looking for, and we got to 73.5 maybe?
What are we looking at, by the way? What's everyone's costume? I see we got Whitetail in the building.
Yep, you got a base god over here.
Oh,
the best
okay.
base god, if I had to say so myself, but he's a very handsome lad.
Yeah, I'm obviously Sean White. I think that speaks for itself.
Yeah, I'm actually Monty.
Yeah, we've got two Whitetails in the building.
I'm a construction worker.
Is that a young Trump before his Bitcoin burgers?
Yeah, I'm just a blue-collar guy who loves crypto.
All right, ain't nothing wrong with that, brother.
You're the most desirable voting demographic in this election cycle right now.
Yeah, you hear about these Fortnite maps that Kamala's dropping?
All right, I'm here to talk about crypto, not costumes now. What's going on with this Bitcoin chart?
Yeah, we're about a sneeze away from all-time highs. I mean, we were talking about this internally this week, but it seems like it's clear Bitcoin's going to all-time highs at this point. It's really broke out of its ranging period, except right now is kind of where they catch the late longs, where if people are leveraging long above 70K right now, they're probably got wiped out and liquidated. I don't think we see any major move until the election, which is early next week. But post that, who knows where Bitcoin could go? It could go to 80K, 90K, or it could go down to 50K. A lot of volatility.
Yeah, and just on that, Monty, great point. Last election, when Biden got elected, I think 2 weeks after a major pump started. So, we are confident that post-election, Bitcoin's going to really break out all-time highs, and super exciting.
Yeah, I think this move actually means something. I know we have kind of little pumps here and there, but I've seen the rest of the market responding. And I know we have a lot of altcoin picks and different stuff that we're looking at. And so I really think this move is what's pushing some of those altcoins. And I think between some of the DeFi plays and some of the meme coin plays that we have, it's going to be a great run. And I think it's right around the corner.
Yeah, and Bitcoin often acts as this funnel into the crypto ecosystem or into the digital asset ecosystem. So what we see a lot of the time is Bitcoin really picking up a lot of users and a lot of first-time buyers, and then people starting to migrate into altcoins, meme coins, and various other digital assets. So good for the whole industry for Bitcoin to be up.
It's the floodgates. The floodgates are opening.
So let's jump over to the AB portfolio and talk a little bit about what we're looking at. I know Mark has some solid picks, and we actually have one of our top picks completely running right now. I was just getting excited about it before we started the podcast. So I think we should start with BSWAP because look at this move right now.
Yeah, click on holdings real quick. And to the right, in the top right, if you click holdings. So that shows our current portfolio, kind of how we are positioned, right? This is the fund. We are still primarily in ETH and staked ETH, right? We've got almost about, close to 60% there. We're actually nearing record lows for our ETH exposure, because, we believe it's alt season, right? We think a lot of these alts are going to have much higher potential to grow. I think Miggles and Arrow, as we've been talking about on a lot of the last episodes, are some of our biggest plays. BSWAP has just doubled since we've started recording. That's about a 1 million market cap, very small, or actually I guess 2 right now. Very small, not making sense how undervalued it is. Exchange, we saw some things like ALB, Alien Base.
Mark, let's pause on BSWAP because this is kind of a great tangible example. So why, what is the thesis behind it? Obviously, we don't create investment memos for every small trade we do, but high level, what did you think about when you were buying BSWAP for the fund? And were there any comps out there that you looked at, or how do you walk us kind of through your thought process here, high level?
Yeah, it's just undervalued. I mean, it's so clearly undervalued. I think that's my thesis, is that you compare it to things like Aerodrome. I mean, first off, the exchanges have always been the first assets typically, or the first platforms in the whole space to make money, right? Coinbase, even when we were trading back in 2016 on Ether Delta, it's a lot of the times the exchanges are the way that people can exchange their coins for more coins, right? So those are traditionally getting an insane amount of value, an insane amount of usability. It's the first app that really makes sense within the space. Everything else is just, you can, if you have a cool token, gaming app, medical coin, whatever it is, if you want to get that coin, you have to use an exchange first. So that's the bottom line thesis, is that first off, the money has to touch these exchanges first. And then when you look at the exchanges, right? Okay, so where are we? We're on Base, layer 2. What other native Base exchanges are there? Which, for the guys at home, or if you want to pull this up right now, Monty, you can go to DeFi Llama. You can go to Base, and then if you scroll down and click Dexes, if you just click Dexes where it's blue, I think it'll filter by Base because you just clicked Base. And if you scroll up, let's see, make sure that we're on Dexes, or are we just on? Okay, so yeah, now click Base. So if you go through this list, you'll see there's several names that you've seen before, right? Uniswap, SushiSwap, PancakeSwap. But I mean, for the past 6 months, and really since Base's inception, we've been more interested in the native Base technology, right? This emerging ecosystem. So, back about 6 months ago, maybe a little bit longer, when we started first buying BSWAP, the only real options was Aerodrome and BSWAP, right? So we bought both. And if you look at some of the volumes and the fees and the revenues that that BaseSwap is making, and compared to Aerodrome, there's a massive gap between how much it's making and the valuation of the actual coin. So, I mean, in my opinion, you have so many different meme coins that are ridiculous, have no value, and they're valued at, maybe 20 million, 30 million, 50 million dollars. And then BaseSwap, if you go on BaseSwap.finance, it might be BaseSwap.fi, it is genuinely a very nice application. It's smooth. It works. It works well. You can do a lot of different things on there. You can read their docs, of course, and that's spelled out nicely. But I mean, the actual infrastructure, the tech, it works. It does something, and it does a lot, actually. And I mean, we can theorize if Coinbase is behind it or not, but either way, I mean, you look at a platform like this that's one of the few native in this booming emerging ecosystem. It's not like we're going to bet the whole house on this, but just to say that this is undervalued at a $2 million market cap, I mean, to say that this is worth as much as Jad the Degen and a lot of other things. There's a lot of other coins that I think are valued much more than this coin, and there's just absolutely no infrastructure. So
yeah, I want to hop in here because I've been yield farming on BaseSwap. I've been using all the features, farming, staking, and I think it's really cool. It's kind of an upcoming DEX that's on Base. It may or may not be connected to Coinbase. and it's offering some pretty decent APY. So to me, it's a great early pick to look at and something that's undervalued. So I'm a big fan of BaseSwap. I'm yielding, I'm farming. I have my tokens locked up in there, and it's been great for me. So
Yeah, and as Monty Whitetail wrote about last week or 2 weeks ago, revenue generating smart contracts. I think that's one of the metrics that we're looking at when we consider that BSWAP is actually undervalued.
for sure. So let's look over at Advantage Blockchain Substack. I think some of these articles are our best work, our research that we put out there for everyone to read. So let's talk about this article here today. We're talking about revenue generating smart contracts. And I think it's an important topic because especially on L2s like Base, this is what people are looking at. Which contracts are generating the most revenue?
We're feeling a little spooky today. So just talking about this this write-up, we look at, well, taking a step back, we are on-chain users at Advantage Blockchain, as Dill just mentioned. We use all these protocols ourselves. We are as crypto native as you can be. And so looking at revenue generating smart contracts, there's some clear advantages that smart contracts add. We list them out here. They ask transparency, trusted execution, autonomy, accuracy, speed, savings. All smart contracts really offer those features. When we look at revenue generating ones, we're really looking at successful businesses on chain. And if you read this article, we dive into it more. But there's a lot of businesses that are profitable on chain, that are generating real revenue, real profit. And we think those are a better metric to show kind of an ecosystem growth than a lot of the other metrics out there, which can be gamed, such as addresses or transactions. No one really cares if you send $10 back and forth to yourself 100 times. But if you sell something for $10 and generate that real revenue, that's a difference maker. So keep an eye out for more of these. We'll have a few coming out post-election. And as we continue to enter the bull market, or move through the bull market, I should say.
Yeah, I think that's awesome. I got a question for you, Monty. I mean, in coming up with this, I think I was the one that suggested we should, create a piece on this, on revenue generating contracts. I mean, I'm constantly listening to Brian Armstrong and Jesse Pollock and what they're listening to, right? I mean, we're stalking these developers, at least, their developments, not their personal lives. But when Jesse and Brian Armstrong say something like revenue generating contracts is one of the best metrics that you need to look at, we're going to look at it, right? So I have a question for you: is what's kind of the biggest thing after creating this piece? Anything that you learned or that you were surprised to see, or just any interesting takeaways that you kind of discovered about this metric or about this, kind of analysis?
Yeah, I'd say one, not all revenue generating smart contracts are equal. Some of them are a lot more profitable, and depending on the underlying economics, they can be. So just to give you an example here, before EIP 4844, the net margin on all of these L2s was about 50%. Now it's closer to 80, 90% for the profitable ones. So the underlying businesses, even if the actual businesses doesn't change, technological improvements actually make them much more efficient. And then just really going down the smart contract, stablecoin rabbit hole has been a topical point of discussion over the past few weeks. And there's a lot of room for businesses to get more efficient and get rid of the middleman, the extractive people who take that 1 or 2% all up and down, really the financial infrastructure. And if you get rid of them, it actually adds very attractive increase in yields to the underlying holders.
Awesome.
And then I guess we can move on. This is what's great. And thank you for suggesting this topic, Mark, because as we kind of look at different ways to value L1s and kind of revenue generating smart contract, there's other people who are also looking at this. So this is Sam from Frax. He founded the Frax ecosystem. They're also looking at kind of how to value Ethereum, how to value kind of that businesses built on them. And so it's reassuring to us that we are looking at the same topics or issues, however you want to describe it, that key players in the industry are looking at.
Absolutely.
That's beautiful.
I think that the L2 ecosystems being built on these L1s, I think it adds a lot of value. And I don't think the market necessarily knows how to value that yet. So I think it's still in a discovery phase because in the last bull cycle, I don't think we had the type of L2 activity that we have now. And it also wasn't the same type of roll-ups and stuff that they're doing now. So it'll be interesting to see in the bull market how the L2 activity affects that value of the L1 currency.
Yeah, whatever that means.
So next up, I think we're going to be talking about more institutions buying Bitcoin. I mean, this topic comes up in basically every podcast we've done so far. And
yeah, I mean, the flows are crazy. I mean, I'll just bring up Hill Dobby's dashboard, but I think we can let Alec take this. But I think yesterday, maybe they brought in $850 million
Yeah.
in Bitcoin. Like, it's getting bananas.
Yeah, it's awesome. And actually this happens, I think yesterday, the Florida CFO today went on CNBC to talk about this, but it came out, and by the way, hilarious that Florida has a CFO instead of a treasurer. Like, that is really cool and hilariously Florida. But he simply has made the case for why Florida should own Bitcoin as a part of their retirement accounts for the state, as part of their pension funds. And it's awesome. I mean, I say this so often, and if you get my emails, if you're watching, if you're on our newsletter, I say this every single time. But what is going to happen when every state, every government, every municipality, various countries, kingdoms, governments, various banks, asset managers, everyone who is starting to get into the game, what happens when they all are in a race to acquire as much Bitcoin as they can? We know that Bitcoin has a finite amount, 21 million. So if it becomes a race, which it seems like it's becoming more and more every day, then it's simple supply and demand. The price is going to go up. And I heard Michael Saylor from MicroStrategy make an interesting point the other day, which is the first country that's really going to win is the one that starts printing their own money to buy Bitcoin. And so what they're going to do is they're going to devalue their own currency, but by doing that, they're going to improve the asset value of their holdings in Bitcoin. And they'll essentially get it for free because they printed it out. It's a very interesting move, and we'll see if that happens at some point.
It's been working for Saylor so far.
Yeah, he's up like 80 billion. I forget which one.
He's catching some slack, though. Interesting enough, I've been seeing some people starting to say that he is like, a false prophet in the industry, which is, crazy. You live long enough as the hero, you see yourself become the villain. Has anyone heard more about that argument of him being a sort of false flag, or am I just too deep in conspiracy land?
I don't see how he could be a false flag. He has literally put his money where his mouth is. One of the only people that has done that. So
go ahead.
I think the pushback on him is that I think I know what you're referring to, Mark. I think the pushback is that he hopped on the bandwagon too late. Not too late. He hopped on the bandwagon late after dismissing it for many years, and now made it his whole personality. I see how that could rub some OGs the wrong way, but at the end of the day, like, he's hovering up Bitcoin. The one pushback I have is that since MicroStrategy is a publicly traded company and in the US, along with kind of the ETFs, there is that backdoor risk that the government knocks on his door one day, is like, hey, we want your Bitcoin, we want all of this. And he does something that gives it to them that jeopardizes kind of the decentralization of Bitcoin. But I think those are a little bit too conspiracy.
Yeah, I'm all for it. I mean, I salute him. Maybe he was a little late to the game, but he's definitely put in a little bit more than me. So,
I mean,
power to him.
They just announced that the MicroStrategy is trying to raise like $42 billion, half in equity, half in debt. We actually released a piece last week that really dives into the MicroStrategy story. So if you're confused on how he can issue all that equity and debt, hop into our Substack. We released it for free. It's a great write-up, and it'll just kind of paint a clear picture for you.
And that's abfund.substack.com. And we've just actually updated all of our socials on our website. If you go to advantageblockchain.com, you'll be able to see every single social that we have, from YouTube to LinkedIn to, I think AB Labs is even over here posting for the moms on Facebook for you guys to learn about Mr. Miggles and all that good stuff.
Awesome. So I see up here we have another group, another large institution buying Bitcoin. This time it is a university. And I think this just goes to say there are so many different people and institutions and groups that can actually purchase Bitcoin, and there's only a finite amount of them. So really cool that Emory University decided to get into the Bitcoin ETF rush, as this article puts it, and they invested in Grayscale's ETF, which is really cool. Grayscale, obviously very crypto native. They were the first Bitcoin trust. They've been trying to deliver institutional rails to invest in Bitcoin for the longest. So super exciting. 16 million, a small amount for a university pension fund, but that being said, it's exciting and a really good start. And I'm sure they'll like what they see in their returns.
Yeah, this is huge. I mean, these universities have billions of dollars in their endowment, and to them, this is a small drop in the pan, but I think it's a step in the right direction. And if universities just started putting even a small fraction of their endowments into Bitcoin, we would see a major rise in price just from that. So I think this is pretty important.
I agree. I mean, just on this college thing, I was just saying last night, to all of our owners, I mean, Harvard has 20,000 students and $50 billion in assets. I mean, that's absurd. Like there's a lot of things that is absurd about that. I mean, even from the education perspective, right? I'm really curious. I mean, as our audience knows, I mean, what we do here at AB besides invest is educate, right? We put out this free resources to educate, but we also have been working with a variety of, lower and higher level schools to try to, essentially teach the youth about what's going on. I would love to see what universities are actually already offering blockchain courses and to what extent. I know some are doing it for maybe grad school, less for undergraduates, but I think as they begin to adopt with their own treasuries and assets, I would hope that they're also making a push to actually educate the student population. I mean, clearly they have the resources. So, I would hope it's important. I mean, obviously they're all teaching them about AI, but are they teaching them how to really make some money on chain? Who knows?
Awesome. So moving on next, we have Microsoft getting into the crypto game. Another big company.
Yeah, I want to point out, by the way, what a name for this website, CoinGape. Really, I really like that name. Good news. They must be delivering really good news.
It reminds me of Goatsy.
But yeah, so essentially Microsoft has begun their early voting on whether they'll invest in Bitcoin. So last week, the shareholders wanted to vote on whether they should own Bitcoin as a part of their balance sheet. Super exciting. And Microsoft is an absolute mammoth that could really drive some great price action, could really accumulate a lot. The Microsoft, the officers had them take the discussion of buying Bitcoin out of their shareholders meeting because it is something that they had already been discussing and is already something that they were planning on voting on. So super exciting. Hopefully they decide to do it. It'd be good for them. It'd be good for us. It'd be good for the industry. And they would not be making a mistake, in my opinion. Not financial advice.
You know about the new big three, right? It's Microsoft, Apple, and Ethereum. That's gonna be the big three in terms of computation. I guess maybe you could throw NVIDIA in there, but
yeah, I guess this is also just brings to the point where you made a comment earlier, one of you guys did, about the race starting and kind of game
Floodgates
playing
opening?
out. Yeah, I mean, the race already started, whether you know you're in the race or not. But seeing all these people buy $15 million here, $30 million there, $40 million here, pretty soon we're talking about billions and billions of dollars. And with any other asset in history, let's say electricity, it gets expensive, you make more of it. Oil, it gets expensive, you make more of it. Anything else, you can make more of it. But with these crypto native assets, they're not making more Bitcoin. And so it's really hard for us humans to imagine something new over the next, let's say, decade or 15 years. But they're not making more Bitcoin. And no matter how much people think they're going to pay for it, if they don't buy it now and more people want it, they'll be paying a higher price later. I think of this as like maybe roping in the GameStop saga we saw earlier in this year when there was a gamma squeeze on the stock and it started ripping. But what did the GameStop corporation do? They issued billions of more shares because it's in their financial interest to do so to keep the business running. No one's issuing more Bitcoin. So I'm not saying we're going to have a gamma squeeze in Bitcoin, but I've seen crazier things. So it'll be interesting to see if Robinhood option traders get on board with it.
Well, shout out to Satoshi for that, and happy Bitcoin White Paper Day. So that's what it's all about. So anyway, let's move on from all these corporations buying Bitcoin, and let's talk about what has become probably one of the best use cases for crypto, and that's stablecoins. And that kind of surprised me, but now I'm starting to accept that stablecoins is one of the best use cases for crypto.
Yeah, and here's Bluechip. It's an independent stablecoin rating agency. So as stablecoins get more institutionalized and more developed, these independent rating agencies are really the people to kind of look at to see if the stablecoin you're using is safe. I have to disagree with this specific one just because it has Tether at like a D, but I think Tether is probably the safest stablecoin to use. But that's each.
Well, yeah. What metrics are they basing this off of? Like, is this sorted right now from grade, and then grade market cap?
Yeah. And there's arbitrary metrics, not arbitrary, but like transparency and certain metrics that maybe we don't value as highly as they might.
Where is Tether on here?
Tether is all the way down at the bottom.
Yeah, so I haven't heard of this, but I would be interested to. I mean, look, I think these ratings agencies it's a tricky business. I mean, one, there's definitely a sort of need for it, but also it's when you begin to lose some of the decentralization in the industry, and then you start to look at, okay, well, what does Bluechip say, or what does Moody's say about this, and do they have the final say on everything, or not? Right? I think it's great that they're aggregating a lot of data, but ultimately, I don't know. I guess they probably have some documentation on how they derive everything. I like their name.
All right. Just say it. We're wondering, is this ordered by who gave them the most of their stable coin?
Yeah, right. I mean, is liquidity, liquidity USD, right? They're just shilling those bags, or what? How can they prove to us that they're not?
Who is watching the Watchmen?
That's a really good question.
That's great. I think that sums up what we have here. But it is an interesting site. But let's talk about the next one. I think is also about stablecoins. So we're going to talk about what is this secret USDC transfer? Yeah,
this is just continuing on the theme of kind of institutionalization of stablecoins. The adoption is that it's kind of crazy that since inception of crypto, you've been able to see every transaction that everyone's done. Obviously, it's pseudo-anonymous where you can see the blockchain address, but legit institutions, real institutions from TradFi don't want that. And so we're seeing development happen before our very eyes where now they're creating USDC transfers that don't show the amount and don't show the entity, but you can confirm that there was a transfer between them. This privacy is needed for these large institutions. And so this is one of the kind of, I bet, demands that they were asking before they came on board.
Yeah, shouts out to Callie Wang for this piece right here. This is really good. I mean, Stablecoins, I was listening to Coinbase's earning call for the second time last night. It was probably the most giga chat thing I've ever done was listen to an earnings call while on the Stairmaster. I really felt like an American psycho. But what they mentioned in there is that biggest takeaway from Coinbase, their Q3 earning call, is that they're moving. They're very serious about trying to move a lot of their efforts on chain, and their three biggest revenue generators from their on chain products and services has really been stablecoins, the smart wallet, and Base, with stablecoins being at number one. It's like everyone always asks, what is the killer app for crypto? And I feel like it's in a lot of the crypto visionaries' minds, it's almost like a stab in the heart and too easy of a guess to have ever guessed. It's just recreating the US dollar. But using, cryptography and the blockchain to back it. But hey, if it works, it works.
Yeah, I think we've always known cross-border transfers of money is probably one of the best use cases of crypto, and that's basically what it's doing here. So anyway, why don't we talk about the next topic, which is Hong Kong, talking about cross borders all the way on the other side of the world. What's going on here?
Yeah, this is a trend in countries trying to attract institutional investors and big money people by giving them tax breaks. And, you heard Dubai came out a couple weeks ago saying that they were no longer going to be taxing crypto to crypto investments or crypto to crypto trades, excuse me. I believe that Donald Trump the other day came out and said that he doesn't want to do any taxes on crypto to crypto transactions. I'm having a lot of trouble saying that clearly. And it is a play that's been run as old as time in, different countries. Back in 2017, I think 3 out of 4 of this team, possibly 4 out of 4 of this team, seriously considered moving to Puerto Rico. And the reason was there was no income tax and no capital gains on crypto, and that they were promising to U.S. citizens that moved there. It is a classic strategy that works. It works. A lot of you see why is Dubai blown up so recently? It's because of their tax laws. It's why has Switzerland always been a safe haven of financial renaissance. It's taxes and it's privacy. So it is. I love this move here by Hong Kong.
Yeah, it's interesting to see that. I think in the news the other day, Italy came out where they actually raised the Bitcoin tax rate or the cryptocurrency tax rate from like 25% to 45% or something like that. And so you have different jurisdictions taking different approaches on it, and we'll see how it plays out. But so far, most of the jurisdictions that have adopted crypto have done a lot better than ones that are hostile towards it.
Yeah, and I think it's such a big piece about how everything is actually regulated and how are the taxes, actually being applied, right? We're all Americans here. We love America. We want to pay our taxes so long as they're fair, right? But I think what the big issue in the past, since the inception of this entire industry, 15 years ago, is that there's really been not clear or fair. There wasn't much clear regulation until a couple of years ago, maybe. It's still not really that clear. And, now it just really doesn't make much sense. It's like, genuinely thinking, I think crypto to crypto transactions should not be taxed because, if you're holding your money in a cryptocurrency that's highly volatile, then you trade that crypto for another crypto, and then you want to be taxed on that based on the US dollar amount. Well, you haven't actually realized US dollars from one of those assets to another asset, right? And I mean, this is a whole long discussion that we don't have to get into now, but I think the real premise is that, the taxes and the regulations just need to be fair. And, all these things that Coinbase and Brian Armstrong and with, the lobbying that's going on with, even Trump is pushing for it. It's like, I think, granted that the regulations and taxes are made more fair, there's whatever country can really do that is going to see an insane amount of capital inflows in the next 0 to 5 years.
Yeah, I saw an interesting debate or conversation topic the other day, and like this is might seem like a stretch, but when in America, commodities cannot generate yield. That's just the tax law. So Ethereum and Bitcoin can't really generate a yield. And so when a new calf, when you have a cow and it gives birth to a new calf, based on agricultural laws, you're not taxed on when the calf is born. You're taxed when the calf is sold. And so Ethereum,
Right.
They're trying to tax the yield on the staking right now, and that's an issue with IRS, a discussion. But if you apply that to other commodity laws, like the cow, that you actually wouldn't be taxed on the Ethereum from the yield until you sell it. This is really the forefront of tax regulation in America. Rules, people are pushing back on both sides, but this is just really an example of the experts in the room don't have anything finalized yet. It's kind of a scam when they say come in and trust us and we'll get it all done. And we're trying to stay on the forefront of that because that affects how we invest. That affects on where we allocate our time and money. And it's not decided yet. So we're going to stay on top of that.
Yeah, I mean, it's so true. I think a lot of the analogies are important to understanding this stuff. It's assets. If you have a tree and a tree is bearing fruit, right? If you have an apple tree and that apple tree yields 100 apples, are you going to pay taxes on every single one of those apples? It's like, I don't know. It doesn't make sense to me. And I think
you
that
pay tax when you sell those apples. You don't pay the tax when you harvest them.
right. So
So anyway, next up, we're going to be talking about Brian Armstrong. I know you just mentioned him. Probably one of the most important people pushing for the right regulation in the U.S. for crypto. So let's talk about what's going on here.
Yeah, I can hop in here, but I think Mark should talk about this maybe more in length. But Armstrong was notable for a few years ago when he said take politics out of work. And that was kind of on the forefront of this. And now he's had a different memo that was released to everyone. Is talking about a work-life balance.
yeah, I think it's a touching little piece. It's work-life balances can be hard, especially when you're absolutely locked in. And you're building something, you're trying to make a difference in the world. It's like if you want to be normal and have a normal work-life balance, then go work somewhere where that's normal. But I think what he says here is like, look, we're moving very fast. We're trying very hard to build very big things, and even we still need that work-life balance. But ultimately, at the end of the day, it's like a lot of things is about pace. I've kind of learned a lot of different organizations are about pace. And if you can't keep up with the pace of the culture of the organization, well, then, you're not at the right place. I think he says it a bit better than that, but.
Sure. I think that's important to keep track of what Coinbase is doing, what issues they're having. And next up, we're going to be talking about Chainlink.
Yeah, Chainlink is one of my favorite protocols in crypto. I know the people that only check token price might be a little disappointed with it over the past few years. Granted, if you're buying at $5-6, you might not be, but
When Lambo.
So Chainlink released something that I think is a really big deal called the Chainlink Runtime environment. What it is it's the next iteration for financial institutions. So back in the day, they had Cbol, which was really the first time that there was any digital transfers between banks. That was upgraded in the 90s and 2000s to the Java runtime environment. And now Chainlink released something this past week that they think takes it to the next level, where any institution that wants to plug into their platform can. And instead of using Chainlink for each of their different services, whether it's data feeds or oracles or random price generation or really any of their product offerings, you can now plug into their whole system and get all of those systems on any blockchain. So now you're kind of building with or on Chainlink rather than with Chainlink, and I think that's a big distinction. It's definitely a different approach than most L1s have taken, but we're in such early phases of the industry that it's really hard to see where the revenue generation will ultimately accrue. And I just have to think that if you're Chainlink and you have all the relationships with the institutions and Swift, that you're positioning yourself to take a little vig on each transaction that goes through. And I think that can be very profitable.
Yeah, Chainlink's been a long time top crypto, something I have a little holdings in. I agree with you. The price hasn't been that exciting, but the technology is important. And I think that it's important for pushing computation on chain, bringing outside data on chain. And I think that's pretty related to what we're going to talk about next, which has to do with AI agents on chain. And
Yeah.
so I think that in order to facilitate that type of environment where an AI can get the data it needs on chain, I do think it's connected to Chainlink. You correct me if I'm wrong, but I do think that they all work together.
Yeah, alpha alert.
Yeah,
I haven't deep dived this yet. Sorry, go ahead, Monty.
Well, one of the topical kind of points started with kind of truth terminal, but now has expanded beyond that, is AI agents on chain. I don't know how I feel about this branding. It kind of reminds me of kind of the crypto into Web3, where it's like, all right, we're trying to make it sound a little sexier, but it maybe lose a cause. These are all bots on chain, similar to Jared from Subway.eth. They just rebrand them to make them sexier. But these are a little different because they allow multiple people to have ownership of them. And so kind of the trend has been whatever ones blow up, other people send them their tokens to try to get more attention. And because of that, the wallet of the one that blew up becomes more valuable, which attracts more attention. It's kind of a self-fulfilling prophecy. I think this is more of a kind of trend right now, more so than something that we can actually utilize. It's kind of expensive to run the computation right now, but this is really the next step for on-chain. And my personal thesis is that most on-chain users will not be human. They'll be bots. And so this is kind of the forefront of that.
I feel like that might already be true.
I know a lot of the Base ecosystem and even the Solana ecosystem is starting to go crazy on these AI agents. I mean, at least calling it this new thing. This might be more of a Base native thing, the virtuals and the real agentification of bots. But a lot of the devs are really, I don't know, maybe it's a come and go, and this is just the Base version of AI pumped out fun. Maybe not. We'll see. This is one of the ones where there may be a big amount of alpha for a week or two, but don't take out a mortgage and throw it into Misato.
Yeah, it's early. It's interesting. I think there's a lot of people trying to put AI on chain. There's other projects doing similar things. I think they all have a little bit of a different angle, whether it's something like ChatGPT that's accessible from on-chain, or whether it's like this where you can create instances of AI that live on-chain. So definitely something to keep an eye on. I'd say in the last year or so, some of these AI projects have popped up with their tokens. So anyway, why don't we keep it moving? Let's go next to Fluid. This is a DEX that uses debt to LP. So pretty interesting. If you want to tell us about this.
Yeah, this is another new trendy app that's on Base right now. Our other research, L2 Explorer, helped bring this to our attention. But pretty simple UX, nothing crazy here. Looks like a lot of other DEXs. What it does on the back end is puts your debt into an LP position that is supposed to improve capital efficiency. We're still doing research on this. It's definitely a new protocol with its design. I've not seen the debt into kind of the LP before. I don't know how I feel about this. It's clean. It's the hot topic. I'm just a little concerned that anytime you try to rehypothecate debt or make stuff too complicated, that's where the house of cards really can combust. Yeah,
this is new to me. I haven't deep dived this yet either. I I don't love debt, but that's also because I'm not as experienced using it. I think it can be an extremely powerful tool if you use it correctly, and an extremely detrimental tool if you use it, incorrectly. But I do know that L2 Explorer, shouts out to him, our AB researcher as well. He's on Warpcast. L2 Explorer is posting, I think he's on like maybe almost 100-day streak in posting to the education channel on Warpcast. He's posting a UEV graphic or dashboard every day, a different dashboard on something interesting in the Ethereum ecosystem daily. So if you guys like dashboards and you like exploring the layer 2s for random new applications, go give L2 Explorer a follow on Warpcast. A lot of insight there.
Awesome. There's a interesting tool. I think there's going to be a lot more like it, especially with how affordable transactions are and DeFi is on L2s. So next up, we're going to be talking about regulation by enforcement. I'm not sure what this is all about, but sounds like the SEC. Yep, there we go, the SEC.
Yeah, so I came across this website the other day, and at Advanced Blockchain, we try to look on the positive side of stuff. We try to look to where the puck's going, not where it is, and really make our investment and time allocation decisions based on that. This number is just absurd. The winners here, this shows that the best position to be in crypto right now is a lawyer, because even if you think you're doing something right, you still have to really pay them to cover your T's and dot your I's. And just this number of $426 million spent on litigation, it just makes me sick to my stomach, honestly. This is just a waste of money where the only benefit here is lawyers. There's no innovation happening here. This is one of the most innovative industries in the world, and we spent $500 million fighting the government. I mean, the government, who are they? I don't know. I don't want to go on too much of a rant or tangent here. This just seems like lighting money on fire to me.
No, I think you're correct. This is an interesting find. I think anytime we can gather just hard facts about this situation, it's very important to bring to light, because I think you're absolutely right, and I think a lot of people believe what you're saying, and a lot of people are kind of on our side. It's just really tough to rally behind when there's not so much clarity as to what the facts of the whole situation are. So I haven't seen this site yet, but scroll through it a little bit. Does it give a whole kind of even more metrics on the situation? Yeah, wow.
Yeah, I mean, what it comes down to is these all are kind of numbers that might not be that tangible. And then you look at Consensus laying off 20% of their firm the other day, and they directly attribute it to having to pay for legal costs. So Consensus has been sued multiple times by the SEC, and maybe they're only 25 or 50 million dollars out of this 426 million, but that's a sizable amount for any firm. And instead of paying your employees or doing other stuff that's productive, you're spending it on lawyers and regulation fees, and that's just not a good way to advance the industry.
I agree. This is an interesting site. Definitely something to keep an eye on. So yeah, let's keep it moving. I think we have an exciting topic, the last one up here, which is our good friend Mr. Miggles.
I mean, reoccurring cast member. What's interesting here is that Mr. Miggles started as a meme coin, similar to a DGen did earlier this year, which is another meme coin the AB family played. But once you have the attention, you can really monetize it beyond that. And so I don't know if there's more details on what the Purr Labs is going to be, if Mark wants to hop in here on that. But they're starting to really help monetize the IP behind some meme coins, and I think that could be very valuable.
Mark,
you're muted, Mark.
Oh, sorry. Shouts out to Mr. Miggles. Advantage Blockchain recently got into their whale group. I think he got a hold at least maybe it's like 0.3% of the supply, which is about 3.5 million Miggles, which is, currently about, 50 to 60 to 70 to 100 grand. I don't know, the price is moving a lot, but anyways, Purr Labs is very interesting. It's kind of their company, the incubation company to the side of Mr. Miggles that is going to be doing a lot of different things, actually, from launching their own toy product to incubating other IP groups to partnering with other organizations like On the Doge, which is kind of the IP owners, or the big IP owners. I believe they actually own the actual IP of Doge. They spent the actual dog that is behind the Doge. They spent some number of millions on it, but this is just an initial announcement that the labs exists. I'm excited to see kind of where they go. I believe that they've got a lot of things in their pipeline, but it's just exciting to see, these coins, some of these projects that we're invested in, having more than just a token, but, alongside that, launching their own actual organizations that other people can invest in, that are having their own seed rounds to, carry out a variety of different products and services and revenue generating missions that are outside of just the token and the number go up. So I'm extremely bullish on Mr. Miggles, and I think that's why our portfolio is roughly 10% allocated to it. And I think that a lot of other smart people in the ecosystem are starting to see that, but it'll take some time. I mean, we've still only got, I believe there's only 2 comments on the official Coinbase YouTube video announcing Mr. Miggles, and both of them are Advantage blockchain. I don't understand how we're this early, but maybe we can check back in a couple months, and we'll be reporting to you guys live with our Lambos and jet skis.
Oh yeah, we can hope. Well, I think that's a good way to close it out. Happy Halloween and happy Bitcoin white paper day.
I see Moonwell. We skipped one up here. There's still some more. Moonwell. Anyone know anything about this? What is this, like an Aave competitor on Base? I've seen the coin flying recently. And
yeah, it's a lending market on Base. It's one of the newer ones. I guess where to just go with this is that when you're looking at, you mentioned the coin flying with this, you look at something like BSWAP that has maybe fallen out of favor the past 6 months or so, 8 months. Like from a investment perspective, which one would you rather put the fund in, the hot new token or the one that's kind of maybe bottomed, or kind of how do you think about catching the trends like that?
Yeah, I mean, look, I think when you're trading, you can't buy what you want. You have to buy the opportunities that present themselves to you. So as much as fundamentals really does matter a lot on what something actually is, if the timing is terrible, then you can make a terrible trade. So it's a combination, really. I think, for us, and recently we didn't catch Moonwell early enough. I saw it, on DeFi Llama for the past 6 months. I didn't look into it, and now it's pumped. So, maybe the entry is not great right now, but that's not to say that the technology and the team behind it aren't great themselves, right? Again, this one has not, we have a very long list of research here at AB, and this one has not been, I'd say, under the full process of due diligence, which is probably spending, we skim over all these things for maybe a couple hours at a time in a skim. But when we're doing actual real diligence on something, that's spending 10, 20 hours on just that specific subject. Moonwell has not entered that pipeline yet for us yet. But just from the people that we follow, which are mostly developers, it's got some good credibility. So I would certainly keep an eye on it and, look out for a potential entrance in the future.
Yeah.
Go ahead.
No, so I'm looking at it right now separately on my computer, and one of the markets I'm seeing is Coinbase wrapped Bitcoin, and I remember when CBBTC dropped, it seemed like one of the best ways to represent your Bitcoin on chain and participate in different DeFi applications. So, and I think we were looking at it earlier, Monty. What can you get yield wise on Bitcoin just from Bitcoin's mainnet right now. I think you said like 1%.
Yeah, well, all of it was on Ethereum, but yeah, Bitcoin,
Okay.
Wrap Bitcoin, whether it's Wrap Bitcoin or CB Bitcoin, it's all like 1 to 2%.
So earn some yield on Bitcoin. Bring people are buying Bitcoin just to bring it to Ethereum and Base.
I love it. And then they can sell their Ethereum on Base for more Bitcoin on Base with CBTC, CB BTC. It's a beautiful ecosystem. I love Base. So based. All right. I guess we could end it there. Happy Halloween, pilgrims.
Boo.
We'll see you guys on the moon.